Okay, good. And let's just go ahead and take a look. And as I said, the first one we're going to look at is this practice midterm for chapter 7. Okay, and just a reminder of where things are on Canvas. We have the practice midterm, obviously, per chapter, as we've been doing. So I'm looking at this practice midterm from chapter 7 right now. And then after we're done with that today, we'll come up and we'll look at these practice midterms 2. There are 2 of them for the second midterm. And then I'll put probably one more up here for Thursday. And that will give you quite a bit of information, I think, to prepare you for the exam, which will be on Thursday. Okay. All right, good. So let's go ahead and let's just jump into these chapter 7 questions. I think I can make that a little bigger. And remember, we said that we were going to practice valuing our inventory using 3 methods: first in, first out, last in, first out, and weighted average. Okay, so that's what I'm going to do with these. And what we're going to calculate is the ending value of the inventory and the cost of goods sold. So we take a look, and we're going to use the same fact pattern to answer pretty much all of these questions. And we're talking about this company here. I'm calling them Buster's Company, whatever, that just started business this year, and they purchased their inventory in 3 batches. Batch 1, they purchased 3,000 items. Batch 2, they purchased 4,000 items. And batch 3, they purchased 2,000 items. Now they ask us here if 5,000 units in total were sold, the cost of goods sold under weighted average. And don't pay attention to the reference to the questions. I'm saying here question 16, obviously that's not question 16, it's question 1. What would be the ending inventory under the weighted average method? So on your exam, I'm going to ask you a question very similar to this. What is the ending inventory? What is the cost of goods sold under the various methods? And I'm going to start here with weighted average. Weighted average, in my opinion, is the easiest, okay? But it's worthwhile to sort of figure out, well, what exactly happened here. So we have what they purchased. Their beginning inventory, since they just began operations, is what? 0. The purchase of the inventory is 9,000. They sold what? The question tells us 5,000. Good. So we must have in our ending inventory now what? Obviously 4,000 units. Now these are going to be particularly important numbers for us because we're going to use under the different methods the valuations we associate with the ending and the cost of goods sold. This is obviously the item sold, so that's how we'll do cost of goods sold. This is the ending inventory, that's how we'll calculate ending inventory. Now, under weighted average, what we need to do is we need to sit here and we need to value each one of these purchases weighted by the price per unit. So if we took, and guys, I'm going to pull out my calculator, but I would suggest you do it right along with me to check my math as I go. I get 3,000 times 4.25 gives me 12,750 for that first purchase. Okay. And then if I put 4,000 in times 450, just doing that on my calculator, right? 4,000 times 450. Okay. I get what? 18,000. And then I do the same thing for that last 2,000 times the what? 4.75 per unit gives me 9,500. Is that what you guys are getting?
Yes.
Okay, good. So then I need to add those together, 12,750 plus what? 18,000. I can read my own writing. Plus 9,500, I'm getting something like 40,250.
Yeah. That's right.
Yes, that's correct.
Okay, good, thank you. Then I take that 40,250 and I divide it by the 9,000 units that they have purchased. And when I divide that by 9,000, I get a pretty funky little number there. They call that an irrational number. I get this 4.47, and I get a string of twos that come after that. Okay, now I'm going to leave that funky number, that irrational number. I'm going to just leave that in my calculator. And if I want to know what the cost of goods sold, and they sold 5,000 units, okay, I simply take that number and I multiply it by what?
5,000.
5,000, good. And when I multiply that by 5,000, I get something like 22,361.1, okay, which should be rounded to, obviously, this is the correct number here. Guys, I'm not going to be testing your rounding by having numbers within pennies of each other. I don't do that. It's going to be clear that with or without proper rounding, which is the correct answer. Okay, good. Now for the next one here, I'll go, and now I'm asking the ending inventory, and that's simply that same number. I'll write it again, 4.47. It's kind of fun to write all those twos, right? Okay, and I'll multiply that number by now how many units were left in ending inventory, 4,000. So when I take that 4.47222, whatever, okay, which 40,250 divided by 9,000 is the way I get that number most easily on my calculator, that big old number. I then multiply that times what, 4,000 units? And that gives me 17,889, okay, which is close enough for my purposes for 17,889 is the answer, right? And I got all those eights in there. I just go ahead and I get it within the closest number. Okay. Question. All right, good. That would be weighted average. Let's go ahead and let's do the same thing now. Okay. If we were doing FIFO, first in, first out, cost of goods sold, ending inventory, now using FIFO, using the same fact pattern. And guys, again, they all came from question 1 here. I took this from an old exam. In the old exam, that was question 16, but I forgot to change the numbers on the reference here, okay? So it's question 1, and now I need to do the cost of goods sold. Well, under FIFO, we say the first things they purchased are the first things they sell. So since they bought, and I didn't put any dates on these, but let's just go ahead and say they bought these on 1/1. They bought these on 1/15. They bought these on 1/30. Okay, so the order that they purchased them was in the numbers of the batch 1, batch 2, batch 3 here. And so since they bought 3,000 units from that first batch, and how many units did we sell? 5,000. So I have to get what? 3,000 from that first batch, and that 3,000 were bought at 425.
Yeah.
So when I do the math on that, I get the 3,000 times the 4.25. That gives me what? 12,750. But I still need what? I still need another couple thousand units because they sold 5, and so far I've only accounted for 3,000. So now I come back and I look and I say, oh, okay, from this batch 2, I still have what? I still have 4,000. So I can take my remaining 2,000 that I need to complete this calculation from those ones that they paid what? 450 for? So 2,000 times, I don't know why I have to put this in my calculator, but I'm kind of a freak about using my calculator for things. I go ahead and I have 9,000. I add the 9,000 plus the 12,750 gives me what, 21,750. Some of your questions on your exam will have 4 choices, some will have 5. No more than 5. Question. Okay, good. Now I want to do the ending inventory, and I know there's 4,000 units in ending inventory, but that's comprised of what? Well, I've stated that I've sold 2 of those already, so how many are left? Now there's 2,000 left. Okay, so I'm going to take those 2,000 at 450. That's the 2,000 that are left. Now I sold 2,000. I've got 2,000 left from that batch 2. I'm just going to call that B2. I multiply that by what? 450. That I know by peeking up at the previous calculation is 9,000. And then the 3,000 that I know have to be left to, excuse me, the 2,000 that have to be left to constitute my ending inventory, right? Because I have 4,000 units left in ending inventory. Notice it's important. Help me just keep track of what I'm doing. That first calculation I did there, the 2,000 units that are left, all of those came in at 475. $2,000 times 475. You guys getting 9,500?
Yeah.
Okay, good. So that makes that 18,500. Okay. Okay, good. Question. That's how we're going to do this. Weighted average, FIFO, LIFO, cost of goods sold, ending inventory using weighted average, FIFO, LIFO. What's that? Right there, that's 6 questions on your exam, okay? I'm probably going to ask you from this chapter about half of the questions out of the 30 questions, about 15 or so, but you can probably figure you're going to have to go through this. Then what? That's 6 questions. You might have to go through a process like this 2 or 3 times for different questions dealing with FIFO, LIFO, weighted average. Okay. Okay, good. Now we're going to use question on FIFO. Now again, this is all coming from question 1. And notice, guys, and this will probably be the case on your exam, I ask a series of questions from one fact pattern, okay, sort of the way we did last time on some of the other things that we were discussing, okay. Now, here now, under last in, first out, okay, and I'm going to go ahead and erase some of this now because this is not helpful anymore. Okay. Now I'm going to assume that those last ones I bought are the first ones I sold. So since I sold 5,000, I'm going to have to take 2,000, right? And I'm going to take that from these 475. Those are going to all be gone. So 2,000, I'm going to sell all those. Sold 5,000, 2,000 times the 475, and now even though I'm calculating cost of goods sold instead of ending inventory, I can borrow from that calculation I made before. And then I need another 3,000 units. So when I look at my table up here, I can take all 3,000 from here because I have at least 4,000 available. So I'll sell 3,000. There'll still be what? 1,000 of those that will be left after I take the 3,000 from there. There'll be 1,000 left. Write that a little clearer. There'll be 1,000 left. Okay, because I'm going to take 3,000. There'll be 1,000 left. So 3,000 at 450. 3,000 at 450 gives me 13,500 if I'm doing my math correctly. Is that what you guys are getting? So 9,500 plus 13,500 gives me 23,000. for my cost of goods sold. For my ending inventory now, using LIFO, I assume that the first ones I bought are still there. So I look and I'm like, okay, well, I've got those 1,000 at 450, and then the entire batch, the entire 3,000 at 425 is still there. So 1,000 times the 450 gives me 4,500. And then I could just peek up at the table because I have all 3,000 are there, and I already extended that out to 3,000 times 425 is this 12,750. So I'm just going to pull that number down. And when I do the math on that, I get 4,500 plus 12,750 gives me what, 17,250? LIFO, FIFO, weighted average, just like we studied in the in-class example, just like we're studying here with the practice midterm, that's how I'm going to test you in that material on Thursday. Question. Don't worry about journal entries associated with the inventory for chapter 7. I'm not going to ask you any journal entry questions for the chapter 7. With inventory, I will ask you journal entry questions for chapter 6 material, and we're going to get into that here when we start to look at the practice midterms that I pointed out to you at the beginning of class here. But for LIFO, FIFO, weighted average, I'm not going to move that forward into a journal entry discussion. Okay. Now, assuming, and again, it's still that question 1, I will almost definitely ask you this. So that now means not only will I ask you about the ending inventory and the cost of goods sold, I'll also ask you about the gross profit associated with that. So now that's what? That's 3 questions per method. 3 times 3, there's 9 of the questions right there. Okay, so you'll probably have to go through a couple rounds of questions like this for the questions from chapter 7. So if they sell the units for 5,000, what's the sales? I mean, for $5, what's the sales? How many did they sell?
5,000.
They sold 5,000, good. So the $5 times the 5,000 means that my sales are, let's label that correctly. My sales are 25,000, guys.
Yes.
Okay. And to get to the gross profit now, that's going to be sales minus what? How do you calculate gross profit? Sales minus cost of goods sold, guys. We've done that 50 times. We're going to do it 50 more times though, so I'm not going to sweat it right now. And what method are we looking at here? Under
FIFO.
FIFO. Okay, thank you. So I have to go back up and I need to look, well, what was the cost of goods sold under FIFO? And the cost of goods sold that I calculated up there under FIFO, right, was 21,750. So I'd pull that 21,750. And 25,000 minus 21,750. Notice I do nothing in my head. Is 3,250. Okay. And then I go ahead and I do the same thing for LIFO. Now I don't have to recalculate the sales price. Sales price doesn't change into the different methods. What they sell them for is what they sell them for. Now that's my sales. Now my what? Cost of goods sold in calculation of my gross profit, which is what this question's asking, is going to be, what's my cost of goods sold under LIFO? I got to come back up. I look back up, cost of goods sold under LIFO, I calculated to be 23,000. So I take that 23,000 now. And I guess I'm comfortable doing that one in my head. That should be 2,000. Question. Okay, guys, do not underestimate. I think this came from chapter 7, not 6. So don't worry about the chapter that it comes from. All of these were chapter 7. But now, any questions? Okay, guys, that's how I'm going to test you on the chapter 7 material. Now, we also studied the idea of lower of cost or market. Okay, and remember, if the market value falls below our original cost for inventory, we will have to sit there and we will have to write the inventory down to that lower cost. Okay, that lower, market. If not, it just stays at the higher cost and we don't do anything. So we'd have to write it down to the lower market if the market falls below the cost. So we have 5 computers that have been part of inventory for 2 years. That's a long time to have computers in inventory. Each computer cost $600. Originally retail, we tried to sell them for $9, and at the statement date, each computer has a replacement cost of $400. So what's lower, the cost, the original cost, or the current cost, the market?
Current.
The current cost, replacement cost, okay, not what we're trying to sell them for. What it would cost us to replace those in the market currently has fallen, what, $200 per computer? Okay, so I would have to carry those at the 400 times the what?
5 computers you have.
Right, $400 times 5 computers, what's that, $2,000? Huh? Yeah, B. I didn't give it out. There is the answer down there. Okay. Okay, I'm not going to ask you inventory turnover. Don't worry about that at this point in time. And that is chapter 7, practice midterm. Questions? Okay, good enough. Let's go ahead then. There's no questions on any of that. I can close this now. Yeah.
Yes.
Okay. Okay, good. Let's go ahead and let's see what we can do. Let's see if Word's gonna do a number on us. Why does it change save it? I have to change that as a setting. I don't like that. Okay, so let's go ahead and let's take a look at, got a couple of things open here. Let's take a look at the practice midterm 2. Okay, now again, if you came in a little bit later and saying, well, where is this coming from? That's up here. Now we're under the comprehensive practice midterm / final questions, and I'm grabbing this one and this one, and I think the one I'm looking at is, which one is it? The second one or the first one? Nobody knows. It's like watching TV. You have the same material. Okay, let's see. Yeah, that's that one. Okay. Okay, good. So let's go ahead and let's take a look now. Now I gotta find the one. Okay, there it is. Okay. Okay, good. Now, many of the questions from this chapter that you'll have on your exam will focus on how we display information on the income statement. So we talked about the multiple step income statement, in which we have what? Our sales, we have net sales. Net sales is sales minus what? Minus returns, minus discounts that we've offered our customers. That gives us our net sales. Net sales minus our cost of goods sold, as we saw in the previous question, gives us what? Previous exam gives us gross profit. We then have our gross profit. From gross profit, we take operating expenses. Operating expenses are our day-to-day expenses. That gives us what? That gives us operating income. And then we may have non-operating items. And in this class, we said that non-operating items will be interest, revenue, and expense, and our gains and losses on sale of any equipment we have in the company. That difference is net income. If you don't have non-operating items, then your operating income and your net income will be the same number. Okay, so income from operations is going to be what? Well, as I just said, you'd have net sales. Well, let's do the whole thing for net sales. Many companies just start with net sales on their financial reports, but for our purposes, let's see how we get net sales. Sales, right? Less discounts, less returns, whatever those amounts would be, gives us our net sales. Okay, net sales less what? Cost of goods sold gives us our gross profit. You also see that called in many cases gross margin. Okay, for some reason margin is becoming used a lot more these days. Okay, those are synonymous: gross profit, gross margin. Then we do what? Less operating expenses gives us operating income. Now, users of financial statements are really interested in this number and this number, because when it looks at gross profit, when an analyst looks at gross profit, they're saying, well, look, you need some, after you got to pay what you got to pay, whatever the market is, you got to pay what you have to pay for your inventory. So we're not really evaluating the company so much on what's, what your cost of goods sold is. We're much more interested in what do you have left? Are you generating enough sales to have something left to cover your operating expenses? Okay, so, and then they're interested in seeing how that operating income number trends over time, because that's my day-to-day. That's something that the company should be sustaining over time. So they'll probably do a longitudinal analysis, sometimes called a vertical analysis, in which they'll look over years to see how that number's trending. So they give us that operating income. And then, and I think it's a little bit immature that a lot of analysts, users of financial statements, like to focus on net income. I'm not as interested because net income necessarily, because what we do is we will then subtract non-operating items. These are items that can come and go. And so even though in industry there seems to be an obsession with net income, and I think it's because people don't really understand what it's all about, I would say that, operating income, in my opinion, is really more important than net income. But a lot of times analysts will focus on that. Okay, good. So with that as a quick review, then what? Income from operations is what? Well, if this is my operating income from operations, operating income, then what did I do? I took my gross margin and I subtracted my operating expenses, didn't I? Stop me if there's a question. Sales revenue less cost of goods sold is called gross profit, gross margin. After gross profit is calculated, operating expenses are deducted to determine Okay, this one's a little confusing. It's technically operating income, guys, but remember I said, but you'd have to look at this and say, well, what's the best answer? If there are no non-operating items, then what? Then this number and this number would be the same. And so you could say net income. So even though that's a little confusing here, in a test-taking situation, it's none of these others. It can't be gross margin because that's net sales minus cost of goods sold. Gross profit and gross margin are synonymous. Net margin. Now you could have got the correct answer to this one, and that there can only be one right answer, and A, C, and D are identical, just different terms, for the same thing. And so you could have answered it that way as well. So if there are no non-operating items, then operating income, and there may not be, right? Because those come and go from period to period. Then your operating income would be equivalent to your net income. Question on that? Okay, good. All right. Now you will see questions like this. Guys, the best way to answer these questions is to go ahead and make the journal entries as walk through the question, make the journal entries associated with each transaction called out in the problem, post those journal entries to your account that they're asking you about, and see what you come up with for the answer. Okay, that's your training. Even though this question is asking you a debit, credit, they're asking you one side of the journal entry, make the entire journal entry. The way I've trained you, the way we've practiced, is for you to make an entire journal entry when you're calculating something, not half a journal entry. And that's the way you should approach it. Okay, so we come over and we look at this Audio Express is using a perpetual inventory system. We'll only talk about perpetual inventory in this class. That's all I'm going to test you on. I kind of mentioned a little bit periodic, but all I'm going to test you on is perpetual. And we will always use the gross method for accounting for our inventory, accounting for our sales. Okay, always use the gross method. So you'll see questions that will call out the gross method. Just know that that's the method we've learned. Okay, we haven't talked about the net method at all. Okay, so the company recently purchased 200 CDs at a price of $6,000. Okay, now, as I said, your best bet is to go ahead and keep track of your accounts as you go along. Let me make this a little bigger because I can see I'm going to need some room here. Okay, so I go ahead, and if I have 200 CDs, and I purchased them. Oh, it tells me I don't have to extend that. They tell me that I purchased them at 6,000. Then I'm going to go ahead and debit my inventory. I think I'm going to co-op this space over here. Debit my inventory for 6,000. And I'm going to credit my accounts payable for 6,000. I'm going to tee up my inventory right here. $6,000. Okay, yeah, so it now has a balance of 6,000. Okay, and I'm going to tee up my accounts payable over here. $6,000, so it has a balance of 6,000. Okay, good. Then the terms are 210 net 30. What does that mean? What does the term 210 net 30 mean?
2% in 10 days.
2% discount if I pay in 10 days, otherwise I have to pay the full amount in 30 days. Okay, now half of the discs were incorrectly labeled and were returned immediately to the supplier. If I return the inventory, is it going to be in my inventory anymore? No, so I have to credit the inventory for 3,000. I post that. That leaves a balance of 3,000. And if you send something back, do you owe the person the money anymore? No. So I debit my account payable for 3,000. So now I still owe what? 3,000 on that bill. Okay. And then they say then they say if the discount period has expired, that means I didn't take the vendor's discount, then I have to do what? I have to pay them the whole amount. So I'm going to have to, when you pay somebody, your cash decreases, as you well know. To decrease cash, I have to credit it. I credit the cash 3,000. I debit the account payable 3,000. Is it true that there was a credit to cash for 3,000? Okay, on that transaction. Okay, now look, these other journal entries, you didn't have to make them. Okay, but again, your training here is to follow through a set of transactions, see how they affect the accounts, and then look to see what the question is asking you. That's the best way to do these. If you sit here in your head and try to keep track of everything that's happening, all you're going to do is get confused. If you stay calm, I'm giving you 3 hours to work 30 multiple choice questions. That's plenty of time to relax, think through what the question is doing, make the journal entries, post, select the right answer. That's how I want you to perform. I'm not interested in how fast you can, sit here and struggle through a bunch of fact patterns. And I'm not here to test that. I'm here to see, can you read a set of transactions? Do you know the accounting? And can you use that information to answer whatever the question's asking you? Question. Okay, good. Glenn Company purchased merchandise with an invoice price of 7,000. Okay, what do I do? If that's the case, I'm going to debit inventory. 7,000. I know I have to credit accounts payable because they tell me what? Credit terms. That means I'm purchasing that on credit. So I'm going to credit the account payable. Tee up the inventory. Tee up the account payable. Debit the inventory. 7,000. That gives it a balance. 7,000. Okay. And tee up the account payable 7,000. That gives it the balance of 7,000. Okay. Okay, good. Now they tell me that the credit terms were 210 net 32% discount if I pay in 10 days, 30%. Have to pay the whole amount in 30 days. What is the cost of the goods if Glenn Company pays within the discount period? Well, if I'm owing 7,000 and I want to take a 2% discount, 7,000 times 0.02, guys, is that 140? Is that $140?
Yes.
Okay. Okay, good. So what am I going to do? I'm going to take that 7,000 minus 140, 7,000 minus 140. You can probably peek at the answers to get that. Is 6,860.
Yes.
When I go to pay for this stuff, what am I going to do? Well, I'm going to credit cash for the 6,860, right? Because I'm only going to pay that. Okay. I'm going to debit the account payable for the full 7,000 because I don't owe this anymore. The guy said, hey, give me 6,860 as long as you pay me in 10 days and I'll forgive the whole 7,000. So I don't owe anything on that anymore. So I debit the account payable. And I'm looking, I say, well, I didn't really pay 7,000 for the inventory. I paid what? 6860. So what am I going to do? I know I have to credit 140 to make this journal entry balance, and that credit goes to inventory for 140. And when I post that to the inventory 6860, isn't accounting beautiful? How much did I pay for the inventory? 6860. How much does it show on the account? 6860. Now, you may be looking and saying, well, John, you know, I didn't have to do all this to answer that question. Okay. That's fine if you are really, really comfortable with it. I could see a scenario where you might be skilled enough, comfortable enough with this material to sit there and say, well, 7,000 times 0.98 gives me that same answer, right? Okay. But the way the question was asked, it really was asking you in a manner where it would have been advisable to keep track of the inventory account as you go. Okay. Okay, good. Now here we've got a series of events, and they ask us, well, what's going to happen to the inventory as a result of these events? Okay, so again, my approach, okay, is we're learning here, okay, is to go ahead and just tee up my inventory. And tee up my account payable. Those are the two accounts that are really being affected by all this, okay? And see what happens, okay? So I received goods for 50,000. If I receive goods for 50,000 and they're giving me the credit terms here, I know I have to debit inventory. You know what, guys? Yeah, okay, I'm going to go ahead and do it. I'm going to do all that journal entries and then post them. Debit inventory for 50,000, a credit account payable for 50,000. What I was thinking about here for a minute, I really could just do this with the T accounts if I'm on an exam and I'm trying to save myself a little time and I don't want to have to do the posting. Debit inventory, credit accounts payable, and just watch the T accounts as I go along. Okay, so the balance is this 50,000. Cash. That way. Put the balance here. Okay, it's 50,000. Okay, good. Then what? Then they tell me I returned 1,000. And so since I returned 1,000, I'm going to take those out of inventory. So I'm going to credit inventory for 1,000. If you return something, you don't owe the money anymore. So I debit accounts payable for 1,000. Post that. Gives me a balance of 49,000. I can do that one in my head. Then I paid 250 on the shipment. Okay, well, if I pay 250 on the shipment, remember we said that any cost that you incur to get an asset so you can use it productively in your business is part of the cost of that asset. Okay, and typically freight charges are paid in cash. Just think of it if you're taking an Uber. Okay, you don't tell the guy, well, send me a bill and I'll pay you in a couple of weeks, right? You simply are going to pay. Or you take a taxi, you pay the person as soon as they give you the ride. That's usually how delivery of stuff works. So I know I have to credit cash for 250. And since that payment is getting that asset to my business so that I have inventory to sell, I'm going to debit inventory for 250, credit the cash. I'm not going to tee up cash here. So now the inventory account would be showing 49,250. Okay. And then if I pay the invoice within the discount period, what happens? Well, the amount that I'm still owing is the 49,000, isn't it? You don't calculate the discount on the amount that's in the inventory. The discount is calculated on what you owe the person. So I paid the driver 250 cash, so I don't owe that anymore, but I still owe the 49,000. So I take that 49,000 and I multiply that by, what was it, 2% discount? And 49,000 times 2% gives me what here? gives me 980. Okay, so I go ahead and now when I pay the person, how am I going to calculate the amount that I'm going to pay the person? I'm going to take 49,000 minus that 980. 49,000 minus 980 gives me 48,020. Okay, 48,020 then is the cash I'm going to pay. So I'm going to credit cash 48,020. I'm going to debit the account payable for the entire 49,000 because the guy said, hey, give me 48,020 on a bill of 49,000 and we're good as long as you pay me within whatever it was 10 days. So I debit that account payable for 49,000. That clears that out. And then I have to look and I say, well, I paid what? I paid only 48,020 for that inventory, not the full 49,000. So I have to go ahead. I knew I needed what 980 to make this journal entry balance. That credit goes to what? Goes to inventory. Okay. So when I credit the inventory now, 980, 49,250 minus what? To decrease an asset like inventory, I credited, minus 980 gives me 48,270. That's the balance in the inventory account. Okay. And also so happens to be the answer to this question. The shortest way to answer these questions, guys, is the long way. You start trying to think in your head of everything that's going on, you're going to have a problem. Now, let me ask you a question. If you look at all the cash that went out for this inventory, how much went out? What's 48,020 plus 250?
48,270.
Okay, so ultimately, very good. The inventory count shows what you paid for it. Okay, but in accounting, we go through and we keep track of things through journal entries. Okay. Okay, now they say that the collection of a $4,000 account with 2% discount period will result in, and again, they ask for half a journal entry. Now, and that's not how we do things. We do the whole entire debit and credit. Now, what they're saying to you is this company must have sold something for $4,000. So at the time of the sale, they would have debited accounts receivable, credited sales 4,000. I'm making this part up just so we don't forget that when you sell inventory, you also have to account for the cost of goods sold. And I'm making this part up. Let's say the cost of goods sold was 3,800. I'm just making that number up. So I would have debited the cost of goods sold. Let's give them a better profit than that. Okay, let's make it 2,800. And the inventory would have been credited for 2,800. Okay, again, I made that up. Okay, so now if we look at our accounts receivable, people are owing us 4,000, but we offer a 2% discount. Okay, so if you take that 4,000 times 0.02, we are offering, what's that? Is that a, can I do that in my head? Is that a $200 discount? Right? Okay, so we're offering a, how much is that discount? $800? $80? I can never do it. Huh?
80.
80, thank you. That's an $80 discount. Thank you. Okay. Okay, so we have an $80 discount on this. So at the time that we collect the money, we're going to collect how much? 4,000 minus 80 gives me 3,920. Okay, so that means that at the time that I collect this money, how much, what's my debit going to be? cash, 3,920. I'm going to get rid of that receivable. Account receivable now is for the entire 4,000. And that $80, I'm kind of running into my cost of goods sold over here, which I can pretty much erase that now because it's not even part of this problem. My accounts receivable now I'm going to do, is credit for 4,000. I need a credit of, I need a debit of 80 up here, so I have to erase that. That debit of 80 is going to go to sales discounts. Sales discounts is an account that the seller has. Discounts that are taken by the purchaser go against inventory. The seller is the one that has the discounts. Remember, we have to keep track of discounts so we can say sales minus discounts gives us net sales. So we have to keep track of our discount account. And so our discount is $80. So when we now look at the journal entry that is made upon the payment of this thing, which is this part right here, we credit accounts receivable for 4, debited the discount for 80, debited the cash. Now look, guys, I could almost immediately get rid of credit to cash if I'm collecting money. And if I'm collecting money on what? On an accounts receivable, I'm not going to debit accounts receivable, I'm going to credit. It's not a credit to accounts receivable for 3,920 because I'm getting rid of the entire accounts receivable. So I have to credit that for the full 4,000, right? And so I'm left with, and I didn't give you the answer to this one. Aren't you glad you came to class today? And then I sat there and I had to debit the sales discount, which is exactly what I did. Okay. Okay, good. Come over and let's take a look at this one. And guys, unfortunately, some of the calculations that we're asking for in the multiple step income statement are so easy that textbooks like to make you figure out missing numbers. I'm not a big fan at this stage of questions like that, but then I'm just kind of stuck with what I kind of getting with the material here. And so you may have to work your way backwards into some things here, okay? So they say, using the information above, can you figure out the net sales? Can you figure out the gross profit, okay? Now, I would start with net sales in this case. So if the sales are 470, and we have sales returns of 20, then it's going to be less returns, right? If something gets returned, it's no longer a sale. We subtract the returns, and I'm looking and say, well, that's about everything that affects net sales. So net sales is what, 450? Now, when you look at this, it's a little annoying because you wouldn't have to calculate the gross profit at that point because there's only one item that has net sales. More likely on your exam, you'll see a couple of the net sales. It'll show 450 so that you're forced to go and calculate the gross profit. But it's easy enough. My gross profit here is going to be what? Gross profit less cost of goods sold. The cost of goods sold, they told me, is 270. So I just confirm what I suspected to be the answer. 450 minus 270 better be 180, or I've got a lot of explaining to do here. Question. Okay. Now, guys, remember that we talked about gross profit percentage. Okay, but let's review that again. If you have what? If you have sales, you take off returns. The returns here were what? 360. Let me write the sales. The sales were 2 million. You subtract the returns. You subtract the discounts. Sometimes the hard part is just lining up the numbers. Okay, the 40,000. Okay, that gives me what? Net sales. Okay, so I'm going to take 2 million minus 360 minus what? 40,000 gives me 1,600,000. Okay, then I pick up the cost of goods sold here. Cost of goods sold is 1,120,000. That gives me what? Gross profit here. 1,600,000 minus 1,120,000 gives me 480,000 gross profit. To calculate the gross profit percentage, I have to take what? I have to take my gross profit and I have to divide that by my net sales. So my gross profit here is what? 480. My net sales here was 1,600,000, right? 480 divided by 1,600,000 is giving me 30%. Which is not a bad gross profit margin. 30, 40%, you know, analysts like the gross profit to be, you know, like 50%. The more the percentage, the better, because you have more fat, if you will, left over to, you know, cover than your operating expenses. Question. Okay, here's what we're going to do, because I feel like I'm talking to myself. I'm going to go ahead and let you work that second practice midterm 2 that's sitting up there in Canvas. Work that on your own. If there are questions on any of those, we will cover those during our session on Thursday. Then I'm going to go through and I'm going to give you some extra batting practice with questions from chapter 7, FIFO, LIFO, weighted average. And then you're going to be on your own until we reconvene a week from today, when we start heading towards the final couple of weeks of class. Okay? Question. Okay, guys, I will see you on Thursday. You need to be, you're not sure what I'm talking about, you need to be looking at that second practice midterm, that one right here, right? Look at that one. I'm not going to do it now because I feel like you're going to have to get your hands dirty a little bit here, okay? You don't learn this stuff by watching me. You know, I can go all day and watch Stephen Curry shooting 3-pointers, and I can watch and watch and watch and say, that looks easy. Yeah, he makes it look easy. It ain't easy. Okay, so you want to hit 3-pointers, you got to practice. Okay, so that's what I want you to do. I want you to go and practice with this. I've given you the answers. I've shown you the calculations. Follow my advice of making the journal entries and whatnot to answer the questions, though, so that you're practicing what you're going to need to do on exam day. Just looking at the answer and saying, okay, I got that, is not the way to practice this stuff. Practice. See if you have questions that you want to address on Thursday. We'll get into some practice midterm questions that I'll be posting up there for chapter 7. And then you're going to be on your own as you go through and take your exam. Okay. All right, guys. Are there any questions? Okay. Keep plugging away. I will see you on Thursday.
Thank you, Professor.
Thank you.